So a lot of the CFOs will be looking at themselves and they've got a brief window here whereby they can show a signal to the market that they are in fine financial state, and to work out which ones are the winners and which ones are the losers. And certainly some of the mining companies have been clearly oversold, and a cyclical upturn we think coming in the next few months, as I think China is going to be a little bit stronger than perhaps the markets had expected, then perhaps there is a good opportunity to see some upside for the miners. You know, if you can't finance yourself or you're completely reliant on the banks, then you are a zombie company. And a lot of these miners have got a situation whereby they've essentially got to work out whether they have enough leeway to survive the next year or two of what's going to be clearly rocky markets. And one or two of them need to sort of shore up the balance sheet, and sending a big signal like that, buying back some debt, makes investors feel that, okay, this is the one that's going to survive, they've got enough leeway, and the fact that they can turn around in future times and reissue debt in a more advantageous rate. Because it's difficult for the miners to issue debt here at very high spreads. It makes an uneconomic sense for them if they can show the signal that they have the flexibility to buy back debt at a cheaper level than probably they issued at it. That makes great sense. They're round tripping the market. Everyone thinks, okay, this is a smart company. And miners are supposed to be traders. They're supposed to buy and sell at right levels, and then they can afford to do that. It sends the right signal. Yeah, we tend to try and watch obviously the big ones, because they then signals to the smaller ones as well. There's obviously more margin to be made sometimes in slightly livelier ones like Fortescue's or Barrick's or whatever you want to look at. But I mean, clearly Glencore is a very important one as far as overall trading is concerned, and Rio and Billy's BHP are the ones to look at for the overall where we are in iron ore and copper and the major commodities. But you know, Glencore is a case in point. I mean, they've had an incredibly rocky time, but you know, that's one of our picks, I think, for potential big upside if they can secure their finances, if the market starts to believe in them. Then these guys are smart, and once we get to slightly more normal markets without sort of nothing but straight down, then I think Glencore are the ones that are going to outperform. Well, at the moment, I don't think there's a huge amount of M&A activity. It's all about survival. There's people who've got plenty of assets, and perhaps they're overloaded on assets, and they need to streamline them. So, sure, there will be some buying, particularly perhaps from the Chinese, but even they have been a little bit more exclusive on the things they've been buying, should I put it that way. So, I mean, in essence, it's going to be certain companies which, if the markets stay this weak or this rocky, then they may well go to the wall. Where the other ones, it's all about survival, and there's trying to keep it away for 3 or 4, 5 years at a time, and which there'll be plenty more money to be made out there.